What is the mindset change, the small habits that you have changed in yourself which have helped you get into that growth mindset?
No, I had growth mindset right from beginning because I had
Acha.
nothing. I had nothing and I knew the power of compounding. Out of literally nothing, we made 30 crores in 19 months. That's how we started building Motilal Oswal, slowly but surely.
During a bear market, what are the behavioral traits that you need to inculcate to hold on to a stock even if it falls 20, 30, 40%?
You have to sit through. You have to sit through.
So at what point do you sell?
Don't stay in cash. That's my call.
Acha,
I never stay in cash. Good
Nahi.
time, bad time.
But now Buffett is in cash himself.
That is his call.
But why do you think that is?
Maybe they are looking for the market to crash. There are two types of business. They keep it simple. Good business and bad business. 80% are bad businesses.
Everyone's talking about this company now, urban company.
Huge consumer behavior change.
Yes.
But they're not making money. I am very clear.
Yeah.
It's a very speculative bet. Yes,
And what
consumer
happens
shift.
then to the traditional players?
All kinds of things will happen, like in broking. Now, even we have been overtaken by the digital guys completely.
Fiat currencies have lost their value a bit globally. Whether it is gold has also picked up in a big way, silver has picked up in a big way. With the whole geopolitical dynamics, आपको लगता है कि equities will have that same charm or same earning capacity as it did 20 years ago?
For the prudent, patient, and understanding investors, it is going to be far faster to make $1 billion than in the past.
So as the country goes from $4 trillion to $10 trillion to $20 trillion the next 15, 20 years, what do you think would be the themes where there would be exponential growth? Hey guys, I'm happy to be a part of Zerodha's media network. Together, Zerodha and I plan to bring to you simple yet effective and impactful news and views from the best minds in the financial world. Today on the Money Mindset, I have a very special guest with me. Raamdeo Agrawal of Motilal Oswal is here with me. Raamdeo ji, thank you so much for joining us on the show.
Thanks for coming.
And happy Diwali to you.
Saal Mubarak to you.
Yes,
Nice.
it's been a good year for
Yes.
a lot of people. Although the markets have not been that great, but I think wealth creation is something that has continued very well.
Yeah. It has been a period of consolidation with little bit of. See, the सबसे अच्छी बात ये है कि market didn't fall. It behaved like gold. Market didn't go down. So upside was limited, लेकिन downside was very limited. So like last year, gold did 60%, equities did 6%, but gold had more volatility than stock market. तो मुझे लगता है अगला साल जो है, नया साल जो है, मुझे लगता है हम लोग का फिर से नंबर आएगा और equity markets will do better than. I mean, let's not say anything about the gold because I don't have any intelligence on that. लेकिन मुझे लगता है this is going to be a good year for equities.
This will be a good year for equities.
Yeah.
Actually, मेरा जो aim है ये show के साथ, it's not to talk about the markets here and now, but to understand wealth creation and the compounding journey. And no one better than you to teach us that, because आपने जितना wealth लोगों के लिए और अपने लिए जो बनाया है वो एक lifetime में, I think there are very few people who can actually do that. तो आज का हमारा show है, it's to learn how to compound your wealth. तो let's start from the beginning. You started from zero, right? तो आपकी जो जर्नी है थोड़ा उसके बारे में बताइए आप. I read somewhere that you were born in Chhattisgarh. You are Rajasthani, and just tell us a little bit that zero से मतलब जो आपकी journey है today to thousands of crores. How has that been?
Yeah. So yesterday only I was in my village. So I'm from Raipur, Chhattisgarh, and did my schooling in Raipur. Then I came to Mumbai for doing my chartered accountancy, and that's where I fell in love with the stock market. Because you do the audits of Century Textile Mills, Premier Automobiles, Bajaj Auto, or all these kind of companies. So those stocks are listed and they were blue chips. So in accounts department, you could see how excited they were and how even the auditors were excited. So that's how I interacted with the stock market, and I used to read books. So in the books, I somehow started selecting finance fictions, where you do the $1 billion show thing in 1980, or Silver Bear, or Money Changer. So those kind of books that shaped my mind. That yes, you can earn a lot of money, and I had nothing in the sense that I used to get $300 for my hostel expenditure every month, and that time our stipend used to be $60 while doing CA. So, and even the country was quite poor. So, then I said from where to start, because in the stock market, if you have nothing, zero multiplied by anything is zero. So I was on top of 200-300 companies, and I was passionate about it. But from where to start?
What age was this?
This is like 28, 29.
Okay.
And then I said, let's take a plunge just before getting married. That you start your entrepreneurship because you can't take this kind of plunge after you are married. Then you have to be hooked on to some job or something, which is what I didn't want to do. So before getting married, I started Motilal Oswal. Me and Moti came together. We both stayed in the hostel and we said, let's start. I know everything about the stock market. He had a brother, elder brother, who was in Ahmedabad, who started giving us some orders from there. That's how the whole machine started. Zero capital. And we started making $500, $1,000 every day we used to make. And first 4-5 years, by 2020, we were about 15 lakhs. After meeting our expenses, we had 15 lakhs. We enjoyed every moment of it. And we used to come at 10 o'clock in the morning and used to go at 7, 8 o'clock, stay in Lokhandwala. So from Marine Lines to Lokhandwala, you know, what it takes. So, but it was a struggle of 4-5 years. Hard work rather, not a struggle. And actually, we never struggled. We kept on moving, but at a very steady pace. There was no lottery. Then came the Harsha Mehta bull run. So if you are prepared in the right place, the bull runs do come in market, and that happened in 91, 92 for us. And out of literally nothing, by that time we were a member of Bombay Stock Exchange, we made 30 crores in 19 months.
Wow.
And then market collapsed. So we left with 10 crores. So we went from 0 to 10 crores, which was princely sum in 92. And we said, now nobody can throw us out. We are here to make big fortune. That's how we started building Motilal Oswal, slowly but surely. And then I heard about Buffett in 94, read his annual report. So then I realized that I don't know anything about investing. Then I went about reading all the annual reports of Buffett from 65 or 67 onwards. Used to wake up in the morning at 5 o'clock and used to read those annual reports, 30 pages, 35 pages. And Buffett used to write about investing in that. And that's how, and that time Buffett was famous in US, but not globally that much. There were no books on him. But I was a bit ahead of him, a bit ahead of the system in knowing him, at least in India. And I started going to Omaha every year to listen to him. So it used to take 32 hours of flight to reach there. Anyway, that was a lot of fun. My friend Sunil Mehtani, he started receiving me there and hosting me at his house and take me to Omaha. Anyway, so that was and then I started writing Wealth Creation Study in 96. And that became a very big ladder for me to climb up on my knowledge about the investing. And we are doing this year 30th Wealth Creation Study. And so I understood compounding in 92 itself, not by Buffett. Late Mr. Chandrakant Sampath, he explained me what is compounding. And that got into my head. So you have to be lucky to get that in your head. Not only you understand, but you actually fix it in the head that this is an important part of your journey. That compounding you must know, particularly if you're in investing. If you don't know investing, I would say you're half literate, or I would say you're illiterate. If you don't understand how to do compounding, and if you don't understand power of compounding. In that case, you might still earn a lot, but knowingly earning without knowing compounding is going to be kind of a lucky strike for you to make it happen in the market. You know, that's what Buffett and Munger, they did in Berkshire Hathaway way back in 63. They understood the power of compounding and they just went about building up a fortune. So as Charlie Munger says, you know, one of the podcasts, I think is there on YouTube, it's much easier to earn second million. You know, so he talks about all the what it takes. I think you must listen to, your viewers must listen to YouTube, Charlie Munger podcast. It's easy to earn second million.
Okay.
So what it takes to first million. And then he talks about compounding itself takes from 1 million to 2 million to 2 billion to 20 billion to maybe whatever. Now one has to talk about trillions only. So, but you have to understand power of compounding, what it does and what it takes to harness the power of compounding. That is what that podcast is all about.
So your journey has been from 0 to 1 million, 2 million and thereon, right? For a viewer who has no experience, who has no great knowledge and who is young, between 20, 30, what does compounding mean and how do you get to your first 1 million?
Yeah, so everybody's journey will be different because they come from different background. And when I started, economy was maybe quarter $1 trillion economy.
Yeah.
Today is starting at $4 trillion economy, going to 8 trillion. So the compounding itself, look at the power of compounding in Indian economy. We started with literally nothing, maybe 10 billion or 20 billion in 1947. Today we are 4,000 billion US dollars. It's just because of 6-7% compounded for 75 years. That's what is the power of it. So that came the same thing, or maybe even faster. You can do it for your own personal wealth. So compounding means, you know, interest on interest. So when you earn, say you get employed or something and you earn say say 10 lakhs rupees or 20 lakhs rupees, and then you start saving and you start investing. So the index does about 15%. If you are able to earn, when your money is small, you are typically able to earn maybe 20-25%, on a small sum of money. So once you earn, say, 25%, I'm just making it simple. If you earn 25%, in 3 years it will double. Okay. So in 3 years it will double. 10 will become 20. Then after 3 years, the next 3 years, it will go to 20 will go to 40. And then next 3 years, it will go to 80. And the last 10th year, it will become 100. So in 10 years, first year you start with 10 lakhs. In 10 years time, you'll become a crore at the rate of 25%. And then in 20 years, what happens? In 10 years, 10 times. In 20 years, 100x.
100 times, yeah.
And then in 30 years, it is 1,000 times.
But that is, sir, you're assuming that a 25% return is what
Yeah.
you
So
make,
that, of
which
course,
is
that
tough
assumption is
part.
there. So you can make it lower. So, but then the process of doubling, say 15%, in 4 years, in 5 years it doubles. In 10 years, it will go 4 times. In 15 years, 8 times. In 20 years, it will be 16 times. Like that, it just keeps going. If market itself is doing 15, you would be doing anywhere between 20 to 25%. Mutila Oswal doubles every 3 years in terms of net worth. 25% is the ROE. So, yes, if you're that committed as an entrepreneur, you can build 25% machine on a very small base for a very long time. Because the opportunity size is very large. So building a machine, you should have ambition. If you're a 20, 21 year old, then you should not think about billion. You must think only about billions and possibly a trillion. Yeah. Because you have seen compounding, what is important is not only the rate. Rate is important, but the lever, the length of lever you have. If you are 20 years and you are going to live 100 years, you have 80 years to compound your money. Now, 80 years means what? 10 raised to power 8. That's about 100 million times. 100 million times. So, that's the kind of possibility you have. So, but then you got to get your first million right. We can keep talking large numbers, but what is most important is to get the machine built for first million. And the first million, how do you make it? Of course, everybody has to put their labor kind of thing. Say like in first 5 years, we earned, between two of us, we earned hardly 15 lakhs. So it takes, but 15 lakhs we earned. And then what did we do that? We bought the membership of Bombay Stock Exchange. See, where do we invest is also important. Because I could see the membership, once I get, then it is going to be a fountain of money. We didn't know that it's going to be 30 crores. But we knew that we'll earn 25 lakh rupees of membership, at least 25, 30, 40 lakhs I can earn. Little I knew that I'm going to earn 10 lakhs in next 2 years. So the God also helps you if you help yourself in compounding.
True.
So, then in 7 years, we were from, say, a lakh rupees, we were at 10 crores. We were 100x in 7 years. If you do the maths. So once that 92 number came, then it became slow because you had already done so much. Then what happened in 2000, Y2K boom came. The 10 crores became 100 crores. In 8 years, it became 100 crores.
But how to get to the first 1 crore?
Yes, that is
the
most
problem.
important. Yeah, so
and that's what 98% of people struggle with.
They do reach that 1 crore. Then they become greedy and they don't want to earn at 25%. Then they want to double every year. That's where they mess up with the machine. They see a company which you have bought is a company, young company, and it is doing very well. Then what they'll do, let's take profit. They'll get off the ramp and they will go for, then again in compounding, the moment the machine you have got off, then again you have to reset the machine to zero. And again it takes time to get momentum. If a company has the momentum and you understand it, you should buy right and sit tight. And very few spots you will get which you understand where you can sit for, because life of companies are not 5-10 years. They are 30, 40, 50 years, profitable life. So you have to find them early. Whenever you find, that's your luck. But then you have to sit on for a long period. And good thing is nowadays, you don't have to break your head on buying a stock, because that's a very long-term journey and very few will be good, I can tell you this. In our time, when there was no mutual funds, we had no choice but to learn through tough route of buying stocks and making a portfolio and paying massive taxes. Today, you buy a good mutual fund, well-managed mutual fund, and just sit tight, because the fund manager is going to work hard for you. And second, then you don't have to spend even an hour in a month to take care of your money. You are paying 75 bips or 80 bips. And other side, you can work very hard on your job. And the way to do compounding is that, say you started with 10 lakhs. Next year, your salary is say 15 lakhs. and you spend another say 5-6 lakhs on yourself and save say 5 lakhs you save. So next year your 10 lakhs will become say grow by 15-17% or maybe 20%. So 10 will become 12. On top of it you put another 6 of your savings. So 12 plus 6 18. So how much it is? 80% growth. Okay, now the second year starts with 18. You again do 20% on that. So that will make it 22 plus another say 10 lakhs you save. So that will make it 32. So 32 on 20 is like 60%. Like that you keep building it up. So you say everybody will
should
find.
be more on your income and saving more and investing more
Yeah.
rather than managing
Yeah,
the corpus.
yeah. So my background is very different. I wanted to be in the stock market. So I converted my passion into my profession.
Yeah.
But if somebody, you are a doctor, you are an engineer, you are a professor, you are a lawyer, you are some scientist or some, you don't have to bother about the stocks. You have to find a good mutual fund scheme and just keep investing. And you can invest every month. If you are saving 20,000 bucks every month, you can go in SIP. You will not realize how much money you have made if you buy into a successful SIP. So it is much easier now to do it, but you need a lot of discipline and patience for a very long time. I mean, if your money has to go from 1 crore to 10 crores in 10 years, it is not going to take 9.5 years. It will take 10 years. And if you are very lucky and by chance there is some bull run, which definitely comes in 10, 12 years, one bull run you get. But who are the guys benefited? Those who are sitting like dog out there.
Yeah.
You know, you have to have that patience. You know, you don't have to be extra energy guys and things like that. So, so those guys, they will get that extra 3-4% bump, and then you go straight from like first 4 years I did 1 lakh to say 15 lakhs, which is very good actually. If you look at the percentage, it might be almost like 100% kind of growth. But 15 lakhs is only 15 lakhs. But when 15 lakhs went to 10 crores, that was one bump which took me to a different level altogether. From 10 to 100, that gave another bump. From 100 to say by 2008, it was more like say 500, 600 crores. That gave another bump, and now that 500 crores is maybe 5,000 crores or something. So you know, as the base becomes bigger, the rate of growth will start coming down. But you don't need, because on a large amount of money, on a 10,000 crores, if you make even 15%, which is the index return, you make 1,500 crores. What will you do with that?
So, sir, tell me, if you want, so mutual funds, of course, your portfolio, you have fund managers managing everything. But if you want to create a direct stock portfolio, how ideally, if you're someone in your 20s or 30s and want to create a direct stock portfolio for yourself, what is the ideal number of stocks you should have, A? And how do you understand both, mix both value and growth investing? I mean, you have the QGLP framework as well. If you can tell us a little bit about the tenets of that framework,
Yeah.
and how do you identify portfolio stocks?
Yeah, first thing is, don't bother too much about number of stocks. When you are starting small, you must commit as many mistakes you can commit. There's not the time to be, there's like you are learning batting. So when you start cricket or any sports, you are going to miss out a lot of strokes. So commit as many mistakes, and that only will allow you to learn. So and I would say that you focus on learning deeper on the stock rather than going horizontal. I mean, 20, 30, 40 stock, you don't know head or tail of what the company does. So if you know one or two companies well, for whatever reason, he might be your neighbor, he might be your chacha, mama, kuch bhi hoga, you must try to understand the underlying business. So go deep into it, and that will allow you to stay, okay, these guys are good. They're very good because I know them. If without spending time, best of the companies you will not understand. So you go deep, know about 3, 4, 5 companies, and you are very fine. You don't have to go to 15, 20 companies. That is for the big guys, those who manage pension funds, mutual funds, those who have somebody else's money. See, if I'm a fund manager, you give me 20,000 crores, 30,000 crores. I can't take the risk the way Raamdeo, an individual, can take. Okay. I can say, okay, I'll put 30% in this company, 40% in this company. He cannot do it. Even SEBI says that you can't go beyond 10% in a fund. So he has to necessarily diversify into 15, 20, 25 companies. So for a new guy who really wants to build in fact, he wants to learn the stock market.
Yeah.
The best way is to pick up few companies for whatever reason he understands. He is a doctor. He understands the medicines, what medicines are going to do. And that particular medicine, that particular company is going to do. So he must focus on understanding those companies well. And then again comes to QGLP framework, which we wrote after 30 years in the market. So basically, you have to execute the QGLP framework. So what are the quality, growth, longevity at reasonable price? So there are 4 components. It's a formula, but within that, how well you use the formula is what it takes. So quality means top quality business, top quality management. Okay. So if you have understanding that what is a good business. See, good business, there are two types of business. Say, keep it simple: good business and bad business. 80% are bad businesses. Only 20% are good businesses. What is a good business? A business which earns significantly higher than cost of capital. आपने आपको यदि 7-8% कमाने का है तो आप बैंक में डिपॉजिट कर दो, आपको 7 से 8% मिल जाएगा. There is no effort, there is no business actually. Okay, the bank borrows from you at 7% and then lends and makes money. So obviously you are getting risk-free, guaranteed 7%, and you can have a good night's sleep. So that is not a good business. Putting money in fixed deposit is not a good business. It's safety, okay. But good business is the one which earns 15%, 20%, 30%, 40%. Nestle earns 100%. You know, and National Stock Exchange earns without, like infinite rate. They don't put any capital. So what is important is to know very good business, and very bad business. If something earns less than 15% or 16%, stay away from that.
Less than 15% on the
return on equity.
Return on equity.
On your equity, if it earns less than 15-16% for prolonged period, stay away. एक दो अच्छी कंपनी चली जाएंगी, doesn't matter, but stay away. Because mileage on my car is very low. I want highest mileage, 100, 60, 70. So, but there are very few after 25. So, bulk of the good businesses, they will fall between 15 to 25. So, I would say out of 100 companies, 80 companies would be below 15. 50 will be below 10. 40 will be below 5. See, bad company doesn't mean the companies which make losses. The companies which earn less than cost of capital is worse actually. Okay, because they look like profitable, but they are not profitable. So you stay away from that. All the retail is stuck there. So,
like, can you give me some examples? Just to understand.
Yeah. So,
what is your definition of example of a not so good company to invest in?
Yeah. So you do the numbers. A lot of large companies are also not earning 15%. Most of the infrastructure companies, most of the government companies, they would earn less than 10%. ROE. Okay. Because ROE is what you get year after year. Okay. So the point is, you have to understand differentiate between good business and bad business.
So where do these companies fit in that are loss making, cash burning, but are perhaps companies of the future, like say
No, that's a different class. See, that is a different class. See, that is about the past. See, when you are looking at today, those companies are different accounting systems. So that's a different subject to discuss.
Yes, we'll come to that.
Yeah, that's a different. Let's have a very special talk on that. You know? So, but generally, an established company which is 10, 15, 20 years old, but struggling to make money, so stay away from that. Second, the good management. Now, when good business is run by good management or outstanding management, or outstanding business is run by outstanding management, you get an outstanding company. And if you can buy at reasonable price, then you get outstanding investment. Are you getting it?
Yes.
Okay. So basically 99% of work is in finding outstanding business run by outstanding management. Now, what is outstanding management? This is where everybody, even I, sometimes fall flat in terms of judging the management.
Correct.
So in judging the management, there are three things you have to look at. First is integrity. Are they hard honest or not? Every management, despite they are very transparent and everything, they are not being honest. Okay. So now the problems are less because the tax rates have come much lower. So, but otherwise earlier when we started, there were a lot of the integrity of account itself was in doubt. So first thing is the guy very honest? That is a very simple thing to figure out. Okay. Second, is he competent in what he's doing? If I'm running a capital market company, am I competent to deliver whatever I'm promising in asset management, private equity? I mean, are the guys knowing what exactly they're talking about? There are lots of guys in wrong businesses. So the alignment of the passion of the management and underlying business should be total. And that you can figure out. Some guys I see in logistic, the guys eats breaths only logistic. I said, boss, kaise 24 घंटों कोई आदमी काम कर सकता है? But yes, there are guys. The guys who are in Bollywood, they're in different mindset altogether. Nothing matters to them. So it is very important that they are passionate They're competent and passionate. So they are honest, they're competent, and they're very passionate. And that's why one-to-one meeting for 2-3 hours is very important. Before you finally make a judgment, this bugger is out of the, what do you call?
So recently, have you come across any such management?
That's the job we do. There are tons of them. And we come out from the interview and see, there is a narrative and there is numbers. So when you meet one-on-one, it's all about the narrative. Okay, then we say, what this guy is saying, does it match with the number? See, it's not that he's starting business right in front of me. He's there in the business for 5, 10, 15 years. And what has he delivered? You know, how do I know whether he'll be able to deliver in the future or not? So we take it on the face value. So what is important is you're getting it, the good business, good management.
But for retail investors who don't have access to management,
No, everybody has
con calls
access.
and all.
No, enough con calls. And if you see every company, they have the IR, investor relations officer. If you have done your homework, even the biggest of the management will meet you. I mean, I'm not talking about top 5, 10 companies because they're very busy. But generally, for a small investor, they have enough access. One is the con call. SEBI has made the entire thing so transparent. And it is audited, transcript is available to you next day. What more you want?
Yeah.
You know, and then you can participate in the con call and ask whatever dumb question you want to ask. You know, and after that also, IR, you can keep trouble. See, if you know the company well, as a smart but intelligent investor, you can build relationship with the investor relations guy. Mostly I have seen the well-entrenched investment relations officers, they know about the company much more than, except for the owner, he knows much more than anybody in the company. You know, so I think you have very good access and enough interviews, then you have time. See, you have only 2, 3 companies, 4 companies. You have to manage, you have a few crores. So you have a lot of time. And then you have the local audits, like if you're buying consumer companies, you can go and check in your small city whether Hindustan Liver is doing well or not, whether this medicine is selling well or not, this motorcycle is selling well or not. So you have to do commonsensical audit also. But then you have to start building your own competence. How do you understand a company?
So you said a few things. ROE of more than 15% is what you need to look at. A good business, a good management, and at a reasonable price. What else?
Yeah, so Q is taken care of by good business and good management. Now G, growth. That's where your question comes about value and growth. So what happens is some of the companies, they are say 50, 60 years old, very large. So they're fantastic franchises, but the businesses in which they are, probably they are not going to grow beyond. See, when your GDP grows at about 8%, there are 50, 60% of the businesses, they grow lower than 8%, and there will be 30, 40 businesses which will grow higher than 8%. That's how the combination brings to 8%. So the companies which are growing at slower pace, typically they are called value companies. So again, so the growth will be very slow. So my price will be low. Because in next 10 years, I'm earning a lot right now. But in 10 years, because my growth is slow, I'll earn, but I'll earn a lot less.
Correct.
Okay, so if I grow at 25%, and if I earn $1 today, in next 10 years, I'll earn 42 rupees.
Correct.
See, year 1 plus year 2 plus year. If you don't understand, please come back. Okay.
No, I'm understanding. So you're saying basically the companies who are not growing at a very fast pace
Yes.
have become value companies.
Value companies, and they will earn less in total in 10 years or 5 years, because their growth their total earnings will not compound at a pace at which growth companies will earn.
So you're saying as an investor, you should find growth companies and not so much value
Let
companies.
me take 2 extremes. A company is growing at 25%.
आप थोड़े examples दो ना, फिर अच्छे से समझ में आ जाएगा.
Okay, so 25% company, there are tons of them. Which will I say? Say Bajaj Finance. Okay, Bajaj Finance is growing at 25%. So if they are earning say 100 crores today, in 10th year they will earn 1000 crores if they keep growing at 25%.
Correct.
Okay, but total profit made year 1 plus year 2 plus year 3 will be more like 4200 crores.
Yeah.
Okay,
Yeah.
but say there is another company, some other company which is also earning 100 crores but doesn't grow. It remains 100 crores only for next 10 years.
Like Asian
Say
Paints.
not Asian Paints. Asian Paints is growing.
It's growing, but
Yeah,
slower.
I don't know. I mean, nothing comes to my mind except for maybe some PSUs or something, some oil companies or something. So what they will do, they're earning 100 in next 10 years. Total in next 10 years, how much they'll earn? 1000 crores. But the growth company will earn 4200 crores. Okay. Now, In next 20 years, what happens? That's the real fun part. That growth company will go 100x in terms of the 20th profit itself.
Correct.
But what will happen to like 40,000 crores kind of a profit will be made. So, but this company will keep earning only 100 crores.
So okay, since you said Bajaj Finance, right? If you identify a company like that and have missed out on the last 10 years growth trajectory, like Bajaj Finance is today sitting at an all-time high. Just an example. If you've missed out, but there's still a growth headroom.
Yeah. See, you're an investor. You have to bother when you are buying.
Correct.
That point is important. Don't bother about what has happened in the past. Don't bother because the economy is growing every day.
But the valuations are also not supportive.
That's okay. That's where the buying at right price is important.
Yeah.
At reasonable price. So, so that all depends on see, Bajaj Finance, there's no doubt about their good business, their good management. Now, this difficult part is done. Now, you have to estimate growth for next 10 years and you have to figure out what price you're paying. If they're going to grow at, say, you think that they're going to grow at 20% and you are getting at 20-25p, you're set. You'll make 18 to 20%. But by chance, for some reason, there is a crisis in the market or something, and Bajaj Finance, you can get it for, say, 15p. Now your peg is reversed. They are going to grow at 20-25 and you are buying at 15. It's a mini multi-bagger. Then you will get growth plus. See, how do you make money?
But it's hard to find those stocks which are high growth but
that
low value.
Where the understanding is important.
Yeah.
If you understand, by doing just the tabulation in Excel sheet, you will not get it.
Yeah.
You have to have understanding of that business. And that's why I said go deeper to find a good investment candidate. And once you find them, of course, you'll not be 100% right. 5 stocks you pick up with a lot of work. 3 will do better than what you thought and 2 will not do as well as you thought. And that's how the combination of 5 as a portfolio will do maybe 25%.
Okay, can I give you a case study? Just for understanding sake, because everyone's talking about this company now, Urban Company, for example, right? Just a case study. Or you can pick between, say, Urban Company, Ather. I'm just picking across different new age sectors, right? Just a case study to understand these businesses and what the future could look like. Yeah.
So you need even more understanding of the companies.
Okay.
So what happens is like I was struggling with e-commerce also. So what is happening is the accounting for the new age companies are particularly consumer companies are very different for accounting by the established companies.
Correct.
So when you have a departmental store, so like Avenue Supermart or whatever is the old style Akbaris and all, what they do, they put up a store for 50 crores or 100 crores, large store. And that store becomes the center of customer acquisition. The moment you open it, the guys will start coming. If there is no store, there is no customer. In online, what happens? The moment you put up your site, and you start making offers and all, the clients start coming and you start fulfilling. You accept the order online and you start filling from your dark stores, which are in some crazy place. Okay. Now, so the cost of acquisition and what it takes to acquire a customer, say a customer like you, it might require, say maybe they will spend about, say 5,000 rupees to get you as a customer. But that 5,000 rupees will be written off now and in the year in which you become their customer. But the 5,000 rupees, if the new store is open from DMart or somebody, they don't have to pay anything. You will go to that store because the store is open. Okay. And they capitalize the store. Okay. So when they capitalize the store, every year they make, say they'll sell goods worth 1 lakh crore. In that, say they'll make 10% or 8-9% EBITDA margin, 8,000 crores. In that, they have to provide for all the depreciation of the store. So then the profit looks a little more than, but in quick commerce, you have written off all the customer acquisition cost the year in which you got it. So 5,000 rupees that costed him to get Sonia as a customer, they have already written off. There is nothing in the balance sheet. So when they will start making money, when the scale comes, when they also become 1 lakh crore turnover company, they'll start making, say, 2-3%, 4% margin. So they will also make 3-4%, 5% margin, or maybe even higher. Let's see how it goes. So when they make 2-3% margin, say 2.5-3% margin, 3% on 1 lakh will be 3,000 crores. But what is the net worth? 0. So their ROE will be almost infinite.
But the problem arises when that customer has no loyalty, when he gets better rates on see, because with a store, what happens with a DMart or whatever, you go to a store, there is no competition at that point.
Yes.
Purchase.
So no. So even your corner store, next door Kirana store, has its own merits because they will be able to give then and there. You can touch and feel and take it away. And everybody is not about online. They're not going to wait for 15 minutes or 1 hour or 2 hours. So they will get the stuff then, but it will be a little more expensive. because they're running a small store and the cost is more. So they will say, whatever the MRP, say 100 rupees the MRP, they will sell you at 100 rupees. You go to DMart, you will get it not 100 rupees, you will get it probably 85 or 90 rupees. Say 80 rupees, 20% discount. You get 80 rupees. You call in quick commerce, they will also try to give it 80 rupees. But then the cost of delivery to you is maybe 85 or 90, and that's why there is a loss to start with. The moment they reach that cost of 80 rupees, they will start making a little bit of margin. So I think, what I'm betting on is that it's a huge consumer behavior change.
Yes.
But they're not making money. I'm very clear.
Yeah.
It's a very speculative bet in what I'm taking. But I'm thinking that there is a very high probability, 90% probability, that they will make money. I don't know how much money they will make and when they will make. But I know one thing. This is the way consumers would want their grocery to be delivered. The way 10 years back we used to buy our theatre tickets going there. Today, who goes to theatre? 100% of that is being bought before you step out of the home. So I don't think grocery will be that monopolized by online. But I think 30-40% in next 10 years is possible. But it's a very large market. Right now, it's $1 trillion market, or say $500 billion market. In next 10 years, it might become $1.5 trillion. Of that, 1/3 is $500 billion. That becomes 500 billion. And there are only 3 or 4 players, maybe 1 or 2 more will come.
Yeah.
Each one of them can have $100 billion turnover market. I mean, these are all now Khwabi Pulao hai sab.
No, I'm with you. I'm very bullish on quick commerce.
Yeah, so what I'm saying is, so now this new advent of internet-based businesses, that has to be seen slightly with a different eye, but it is speculative, let me tell you. If they're not making money, you are definitely not going to win that easily. And they're not a hell of a cheap.
But how do you include that in your framework? Because you pick companies that are profitable.
Yeah.
But these are loss-making companies.
That's what I'm saying.
So what
These
do
are
you do?
different. That's why I'm very limited. My 95% exposure is the conventional companies. I'm learning the ropes.
Yeah.
I'm learning the ropes. And I've not made money out of this, anything
It's
online.
great to see that you're adapting to the change,
You have
because
to.
a lot
You
of
have
fund
to.
managers don't.
No, you have to adapt. You have to adapt, because the way they're valued today, they would have not been valued like this 20 years back. So you have to, so markets are becoming a lot more rich and they are willing to take risk at the margin. You can put some money aside and say that, okay, here is a company which is, see, because the growth rates, because of compounding. I mean, when a company goes from, say from $1 billion to 100 billion in 10 years, you imagine what kind of growth rate you're talking about. So those are the potential for the winners. So if there are 4 players, there will be only one who will have 50% market share.
Correct.
So out of $500 billion, 250 billion will go to that company.
It's a winner takes all kind of market.
It's not winner takes it all, but not like telecom, but also
Duopoly
here
kind
also it will be there. So who will be winner? That is not decided right now. There are number 1, 2, 3, but so you buy all 3. The one which is number 1, that will go say 100x. Number 2 will go 30x, and number 3 might make 10x.
Correct.
In all, if you put 3 bets, probably you'll make in 10 years maybe 15, 20 bets, 15, 20 times, which is more like 30%, 32%. So that is what I'm thinking. And of course, the urge is to compound at 40% or something, at least some portion. So that gives me kicker. I know my portfolio, which is compounding at say 20% or 22%, I want to take it to 23% or 24%. I know this 22% cannot go to 30%. That much I know very well. But there is always an effort to push the envelope a little more. And this particular investing into internet-based companies at as early as possible, an effort to learn, is that only. It's a little bit of speculative. You don't have to be mastering that. But yeah, internet offers a very different kind of opportunity for investing.
And there's a wave, right? A consumer behavioral change. Like, for example, even urban company I was talking about. Yeah. People are now getting a little used to that,
It takes time.
At the fingertips, you get services at home.
Look at US, the mecca of capitalism. So, out of top 10 companies, 8 companies are internet companies, internet-based technology or consumer or whatever. So,
digitized.
Digital world. So, in India, not even, I think only Zomato has made it to top 10 or something, is it?
Yeah.
Or something like that. So, we don't have true digital companies in top 10 also. So this is going to be...
So potential is
there, massive potential. And this is a crazy country where actually infrastructure is so weak that internet is actually boon to this country. For US, where the telecom was there, very good roads were there. Here we don't have proper roads, we don't have proper telecom, we don't have proper, other infrastructure. Transport infrastructure is very weak. And so if you want to buy a Nike shoe and you are in a living village, you have tons of money. How do you get it earlier? You have to come to the city. Now you order it on the internet. Maybe it will take 2 days, but it will reach you. So you can consume what what your pocket affords. It's not that what is available. So it breaks the excess. Internet breaks the excess of any goods and services. Like why the stock market is getting 3 million customers every month. The whole country has become one. These are different times altogether. It is thanks to internet. You have the digital payment, you have digital dematized account, you have the access. I mean, whether you are living in my village or you are sitting right next to the NSC tower, the price is same. You know, so they can also access, buy mutual funds, buy speculative stuff. They can do anything, and that is what is bringing the whole country into the market. You can imagine out of the total savings or GDP. Savings at 20% is a household saving. Of that, now we're getting about 2% into the market every year. So the cumulative growth will be massive.
So since you spoke about consumer behavior change, now I wanted to talk to you also about what's happening in autos with EVs, because now I'm noticing that every second car, 4-wheeler on the road is an EV, and every second 2-wheeler on the road is an EV. So whether it is Ather, M&M, all the guys who are really big in EVs. So is that a big consumer shift that you're noticing as well?
One of the biggest consumer shifts.
Then to the traditional players?
No, traditional players only are bringing most of the products. It's not like Tesla is the only one, or BYD might be in China and America, Tesla. But otherwise, all the EV products are coming from the conventional guys. So there is a massive transition. The profit is coming from the IC vehicles, and the future belongs to the EV. So they are struggling. In India, that thing has not become so bad. Whether it's Mahindra, whether it's Bajaj, TVS, Hero, everybody is bringing their products.
Yeah.
So it's a very happy situation actually. The transition will happen, but while transition is happening, they'll keep making money. So the old products are funding the new products in here. It is not disruptive. That old is some other set of guys and they are killing the old guys. It's not happening like that. So all kinds of things will happen, like in broking. I mean, the guys with whom we started in 87, they were fantastic guys, but none of them survived. So it came to a few professionals like us. But now even we have been overtaken by the digital guys completely.
You feel that?
Obviously, they have the 80% market share. We have only 20% market share. The growth is all to digital.
Pure play digital guys, you're saying?
Pure play digital guys. Of course, see, market is segmented among the advisory and non-advisory. So we are kind of wearing the hat of advisory and cross-selling other products. And that's how we are growing the pie. But good thing is that despite market share loss to digital guys, the total business available to us is growing very rapidly. So all kinds of things will happen. And that's where understanding the future of the economics of the business and the management competence to do the business. Opportunity is there for everybody. But who has that passion, competence and honesty to deliver it? That part has to be understood. The first thing is opportunity size and quality of opportunity has to be understood. That's the business. And then you get the guy who is going to do it. And then you have to buy at reasonable. You have to avoid very, very expensive kind of situation. Otherwise, instead of 20p, you buy at 25p. Okay, 1 year there won't be very low return. Then it will make.
Okay, that way. So
you have to just wait for
buy
longer
expensive,
period.
but just don't buy horribly expensive.
Yeah, horribly expensive like 100p, 200p. उसमें मर जाओगे आप. उसमें क्या patience भी खत्म हो जाता है. But if you buy it instead of 20p at 25p, ठीक है ना यार. 1 साल नहीं बनेगा पैसा. 2 साल नहीं बनेगा पैसा. लेकिन मेरे पास तो 30 साल की जर्नी है. I'll make next 28. So in 30 years basis, on a 10-year basis, instead of 25%, my return will become 22, 23%. That's about it. But I should not buy horribly. That's why I always use the word not cheap. I say reasonably priced.
तो आई हैव अ स्लाइटली कंट्रोवर्शियल क्वेश्चन. जो लास्ट 20 इयर्स में हम लोग ने पैसा बनाया है, सब लोग ने मिला के, यू थिंक नेक्स्ट 20 इयर्स में इक्वली उतना पैसा बन सकता है? ना आई एम आस्किंग बिकॉज देयर आर मेनी न्यू एसेट्स दैट हैव आल्सो कम इन, राइट? वेदर इट्स क्रिप्टो करेंसीज, fiat currencies have lost their value a bit globally, whether it is gold has also picked up in a big way, silver has picked up in a big way. With the whole geopolitical dynamics, आपको लगता है कि equities will have that same charm or same earning capacity as it did 20 years ago?
Yeah, equity is the only way you earn money. See, gold, silver, whatever has happened, I'm a bit surprised positively, but the assets don't grow. If you have a kg of gold, say when you were a kid, 10 years, and now, it will still remain a kg. But say 30 years back, Motilal Oswal is not even a 10 crore company. It was a crore company. Or say 92, it was 10 crore company. Today it is 12,500 crores company. And we have not taken a penny from anybody. We have got more dividend buybacks than whatever 300-400 crores we got in the IPO. So how is it possible? Because it's a growing asset. So I don't see any reason why in next 25, 30, 40 years or even 100 years, there is nothing like concept of equity. See, how you select and what time you buy, that is a different subject altogether. But as a concept, as an equity, it's a perpetual. And that's why indices are going to do very well. You may not do well because your selections might be bad. But index is like a representative of the market. Market will move. The bad ones will be kind of thrown out and good ones, all the leader companies will keep coming in the index. So next 10, 20, 30, 40, I have seen the market for 45 years. All kinds of crises I have seen. I think the world looks much better. At least for India, it looks much better. Even the world is becoming very rich. The world wealth in turn of the century was about $50-60 trillion. Today it is like $300 to $400 trillion. There's one economist, he predicts that by 2050, the world wealth will cross $2,000 to $3,000 trillion. In that, India will be, I would think that India today is about $10 trillion wealth, private wealth, I'm saying. GDP is, market cap is 5 trillion.
4 trillion.
Other, GDP is 4, market cap is 5, and other non-stock wealth would be about another 3-4 trillion, like bonds and government debts and all that. So we would be about 8 to 10 trillion wealth base. In next 25 years, I won't be surprised if it goes to $100 trillion wealth in India. See, when world goes to 2,500, I will be at least 2,500. I will be at least 5 to 6% of the world wealth, if not 10%. So, keeping that thing in mind, see, you have to have that base, this kind of thinking, and then walk into the market and do that stuff. See, when the batsmen come to open the inning, ऐसे तो सबने बहुत रन बना लिया, इसका आगे बचा ही नहीं क्या, रोहित और जितना बना लिया. So do you mean to say for Shubham Gill and others, they don't have any scope for making runs? It's a new game. Start from zero again. You can still hit 300, you can still hit 200. In fact, it is far more for the prudent, patient and understanding investors. It is going to be far faster to make $1 billion than in the past because opportunity size is very big.
So to capture this opportunity size, if you are a mutual fund investor, how many ideal funds should you have in your portfolio?
I buy my own funds only, and I'm very focused in the sense that major allocations are in, say, 3-4 of them. Because whatever I buy, say, 2013, 12, whatever I put, I used to own 10, 20% of my fund itself. So they have become smaller because the flow has been big. But I still own 7-8% of all the funds.
No. How many number of funds should one have?
I think 1 or 2 or 3 at best.
That's enough.
Yeah. Again, you should know the manager, who's managing.
Yeah.
You know, a good manager, if you know 2 or 3 good managers with a track record, you don't have to ask him. You don't have to even meet him. You just see his track record. If he is a guy with an average of 50%, said in market does 15 and he's done 22, 23 throughout, you don't have to find 3 of them and just you're good. And that's easy because you don't have to meet him. You don't have to make a judgment. The data will decide whether he's a good manager or not. And keep chasing him. At times they keep changing the platform. So your money should be with them only. That's actually a real challenge.
So one more challenge what I face, and I generally ask, a lot of people about this, is during a bear market, what are the behavioral traits that you need to inculcate to hold on to a stock, even if it falls 20, 30, 40%? Because I've noticed that the best investors are those who can wade through that phase. So say you buy a stock, any stock, right? Say, just for example, say Polycab. Now bear market comes and that stock has fallen 40% because it's momentum. What do?
You sit through. See, because you understood the company. The company's journey is not getting over because the market is down. See, company you bought at 100, it went to 1,000. Okay, you still think that the stock in 10 years, it can go to 10,000. But the markets are crazy. The 1,000 can come down to 500 or 300. You have to sit through. So at what point do you sell? You sell when you get a better idea. Or you find that now enough is enough. Say like an auto company, if they're not good in EV, so then transition is happening. It is better that you move on to somebody who is better in the EV and all. So like that, or you get some brilliant idea, which you think is far superior at this point than the one you are existing. So then you do the transition.
Okay.
So if you are successful in what you have bought, focus on buying the right company at right price. If you have done that, 99% of job is done. Then when your company has already become, say you bought at 100, it has become 1,000. Now you have the luxury of, if you find another idea at 10, obviously you must slash, say 10% of that existing one and put that out of 1,000, you put 100 onto the new idea. You say you sell 500. You still have the 500. And 500 you put in 5 more new ideas. Of that, maybe 1 or 2 will do well. 2, 3 will fall by the wayside. And that's how you keep building it up. Don't stay in cash. That's my call.
Achha,
I never stay in cash. Good time, bad time.
Okay.
Yeah, I'm always, even before I met Buffett, from 87, I've never been in cash. I have not seen cash in my balance sheet.
But now Buffett is in cash himself.
So that is his call.
Why do you think that
that
is?
aspect I don't follow.
But why do you think that is?
I don't know. Maybe his age,
Huh.
his age, size of the money. He's running $1 trillion. So his challenge is very different to find a idea of 100 or 150 billion or single idea where he's buying QGLP, like good business, good management at a reasonable price. And you can, so he has to acquire the company only. If he likes a company, I think he has to buy outright $100 billion. So that is his challenge, to find a company which he would like to acquire and buy at reasonable price. So maybe they are looking for the market to crash. You know,
So even if
so
you get,
at that point of time, then everything will be available cheap.
but even if you get signs that there is a market crash coming, you don't move to cash.
No, because I can be horribly wrong. Because market, say from 100 it has gone to 1000, and I think now 1000 is too much, but it can go to 10,000. So then you have missed the party, the best of the party you have missed.
Has that happened to you before?
Yeah, many times. In fact, I could see market peak in 2000 as well as 2008, and yet I didn't do anything. In fact, in 2002 I was not knowing that much, but in 2008, one of my colleagues, Naveen, he came and said, Raamdeo ji, it's already become 550, 100 has become 30, 100 became 30, and 30 became 550. He said, Raamdeo ji, at least 1/3 you book, because 67% in any case is going to go down. So 1/3 or 50% you book, you lose much lesser. I said, take a walk. We are going to go through. So what happens is that, yes, my 550 crores which was there, that became 225 or something. It became 50%. But in next 1 year, in 2008 it crashed, it became half. In 6 months time, it went to 600. So I had a painful period of 12 months. That's about it. But if I had sold, then I would have paid the taxes. Second, I would have not been that smart enough to buy at the bottom.
Oh, you couldn't time the re-entry properly.
Because nobody gets it. The God has made the whole system so complex that if you can get your top right, you'll not get the bottom right. And then even if you by chance you are smart enough to get the one bottom right, next time again you will time, market will fool you. And then again so you have to get every top and bottom right for this to happen, and you can never get it. God has designed it so perfectly that you can't get it. So it is better to just sit tight, because the journey is that of 15%.
So you only sell a stock when you get either a better idea, but do you sell largely in bull markets or in bear markets?
No. If you give me a better, in fact, I keep doing that. In fact, I see my bulk of the investment is in mutual funds. So when I get a new idea, I have to redeem my mutual funds, and then I buy that idea.
It's interesting, but I didn't know that you were never in cash.
Never,
Always.
never.
Because a lot of fund managers nowadays.
There are very few guys who can talk a lot, but very few can practice this.
Yeah.
That don't bother about where the market is. Just keep doing a job, keep finding new ideas, keep putting. Don't sit on cash. Market will fool you around, I'm telling you. And you might get one round right. Most of the guys, a lot of smart guys whom you know, they sold in 2008 at top, but they couldn't catch the bottom. So
and once you sell, then you cut the compounding effect also, no?
No compounding. If you can buy, if you sell at 1000 and you are able to buy it back at 500, of course it helps in compounding.
Yeah.
But by the time you again get the confidence, it is 900 or 1000. So it's not worth paying the taxes. You bought at 100, you sold at 500, you have to pay on 400 rupees, say maybe 15%. So you end up paying actually 70, 75 bucks to the government. And then you have to get, so you are actually sold at 600. Now you should be able to buy at 600 or something like that. वो होता नहीं है. By the time you actually again re-enter the market, because you are continuously wishing the market should come down further.
Yeah.
You don't have target. When you sell at the top, you don't have target that at 7, I'm selling at 1000 and 700 I reverse the trade. ऐसा कोई नहीं करता है. That kind of discipline is not there. So you stay out. So I also have painful time, because I can see the stocks are available at dirt cheap rates. You know, the various stock you have in your portfolio, they are available at half the price or 1/3 of the price. But you don't have money. So you feel at that time bad. But that's fine.
Okay, so you taught us when to buy, when to sell, and what are the tenets of being a good investor for the long term, right? Value investing, growth investing at a reasonable price, all of that. So as the country goes from $4 trillion to $10 trillion to $20 trillion, the next 15, 20 years, what do you think would be the themes where there would be exponential growth? Something that you're working on right now.
Yeah, so see, a lot of consumer. See, we are a country of 1.4, 1.5 billion people, and now the growth rate in demographics is slowing down from 2%. It has come down to 1.8 or something like that. So as the time passes, it will further slow down. So the pace of individual wealth creation will pick up. So there will be a lot of things which will be coming out. I mean, a big picture I'm saying. What has happened in other parts of the world, particularly China and all, it is all going to repeat here. So So as the country becomes rich, I think government taxes will go up. So there'll be massive spend on the infrastructure. That will be relentless. Like opening new airports, hundreds of new airports will come, thousands and thousands of kilometers of very sophisticated highways will come. Like what looks like a terrific thing in coastal road, like that, plenty of them will come. Like what has happened in 75 years, one coastal road from Mumbai. I think in next 8 years you'll get at least 3, 4 of them of that same kind of impact, because there is so much more taxes with the government. So government will splurge a lot. I think maximum will be infrastructure build up, because that's the biggest deficit. Now, infrastructure doesn't mean only road or rail or airport. It also means social infrastructure like education, tourism, all sorts of things will be there, and there, the companies which are going to benefit, and so then the thinking comes, when you want to invest for future, how exactly you can see today. Those companies might be not even born, and that's where this digital companies, they are going to be the future. Now, of them, hundreds of them, which one the one which you want to bet? So not only you need growth, you also need potential for profitability. Right now they don't have profits, so you have to have potential for profitability. Terrific management, not in doubt. QGLP means, like, first is, instead of profit today, I'm saying potential for profit. That's the only change. Second is terrific management. In fact, you need even more terrific management in this thing. Longevity growth, because they're starting from zero, so growth is going to be very large, and the opportunity size is going to be, see, understanding the compounding in the GDP is very important. Today you have $4 trillion economy. In 2032-33 will be $8 trillion. By 2035 for sure it will be $10 trillion economy. It will be a 15 to 20 trillion or maybe 25 trillion stock market. So all the asset managers, all the capital market components, they are going to do very well. So you have to figure out one, and you don't have pharmaceuticals, they will do very well. Hospitals will do very well, because a lot of people become a lot more rich, and they will also become a lot more sick. So they will go to branded hospitals. So hotels will do very well. So it looks that the prosperity related, where discretionary spend is there, those things will do well. And there will be boutique companies, there will be mass scale, like this quick commerce and all. They should do very well. But there are competitive forces when you're not making money, in particular internet companies. Who will survive? Who will be the survivor of? See, businesses will become very large. I don't have any doubts. But which are the businesses where you can make few bucks and keep making few bucks without disturbing? And that's where the monopolistic tendency, businesses with monopolistic tendency, is very important. Say like stock market, like NSE, BSE, they'll become very rich. They'll keep making money. So many businesses which are
BSE, stocks like BSE and all, despite the rally, despite the valuation.
That now we're talking about only companies. We're not talking about investing.
Yeah.
Investing is a separate thing. Don't mix it up.
Correct.
First you figure out where to put your money, and then whether you get an opportunity to put it at a reasonable price. That is a different thing altogether. So you have to visualize the future, and that's where the reading comes. Reading, when you're reading books, it gives you some sense. Like I talked about $2,000 trillion global economy. In that we will be about maybe $200-300 trillion. In that, what will win? Then the demographics come into play, then the entrepreneurs come into play, then local opportunities come into play. So every country is different. Two-wheeler companies don't make money in any parts of the world except for India. So you have to understand what makes money here. And that's where the wealth creation study and all those things come to help. And you get some flicker of what is going to do well. And then you bet on that. And then after 3 years, you realize, okay, it did well in last 3 years, but it is going to do even better in next 3 years. So that's how the compounding keeps doing.
So if you had to compare India to some of the countries, the first world countries, whether it's not just the US, but even China, what are the learnings that we can take from these countries where maybe India is falling short now, but can work on and is the need of the hour maybe?
I think India is doing very well. See, I started my career in 1980. Since then, India has done very well as a stock market performance. We started at 100, we are 82,000. Korea economically has done very well, but they were at 100, today they are 4,000. I'm 82,000. So which has done better? Korea has done better or market? So if I look at the stock market, Indian stock markets have fabulously done well. In dollar terms, local currency terms, every term it has done very well. So my comment, I must restrict to the stock market only, rather than talking about some global economics, this, that.
Sure.
That's not my forte, and I don't know much about it. But I'm of the, optimistic view that world will become very rich as the time passes. There are always noise. This tariff thing, the bilateral, ye, wo sab hoga. But finally, world will become very rich. And it has become rich in last 45 years. So in next 25, 30 years also, the wealth machine of the world We'll keep working at even faster pace with the help of internet, AI and everything. And in that, we have to pick our
Pick your bets.
Yeah.
So, our show is called Money Mindset. So, I realize after talking to so many people that more than money that you make, it is a mindset change. And a lot of people come from nothing. Most of the market guys have started from nothing and now have made. So, what is a mindset change, the small habits that you have changed in yourself, which have helped you get into that growth mindset?
No, I had growth mindset right from beginning because I had nothing. I had nothing and I knew the power of compounding. So I was always in growth mindset, but I was also very disciplined. I didn't want to be overnight rich. I didn't want lottery. I didn't want any, kind of somebody gives you endowment or something. No, I wanted to work for it, but I wanted to be successful and I had enough time. So if I compounded 25%, my perfect framework is 25, 25, 25. So 25% growth, 25% ROE and 25 PE. So that's the kind of framework I have for myself. And 25% compounding 10 years, 10 times, 20 years, 100 times, 30 years, 1,000 times, 40 years, 10,000 times, and 50 years, a lakh times, 60 years, a million times. That's the journey we are in, and how long I live, it depends on that. But then I have lived that journey. So for me, we started a discussion with that. Do you have a machine? So we have been successful in creating this machine, which grows at 25% with 25% ROE. How long and how big it will become, I don't know. But we'll keep coming with newer ideas to keep compounding at 25%.
Any regrets in your journey?
Nothing. It has been perfectly all right.
No regrets at all?
No regrets at all.
Something you could have done differently?
No,
something personally, professionally?
I know things have to, see, things will happen the way it happens. The world will move, world will do whatever it does, some technological advancement, some challenges. But generally, I have never had any accidents or, first thing is, it is my first career. So I never had to go to some different route and then come back. No, it's not like that. Right from day one, the real thing is that I knew where I want to die. I want to die in the stock market. And that's how I picked up the career. And we kept on building the type of business, the wonderful people with whom we work, and we worked, wonderful clients, wonderful market, and the advent of CNBC and all of you. So what more can you ask for?
Wow, that's amazing. First time I'm speaking to someone who has no regrets at all.
Yeah.
Because, I mean, you talk to some, they'll always say, oh, I wish I'd invested more. I wish I'd invested like this person, like that person. This person made more money than me.
How lucky I am. I started with nothing. From a village where there was no electricity. Today I'm sitting with you here. So you have to be thankful for the whatever God has done to you. And best thing is now I have good health. What more do you want?
You told me one day I want to live till the age of 100 so I can
healthy 100. 100 is not important. Healthy 100 is important. 100. So I can do the same kind of interview with you when I'm 100. I'm sure you will, 100%. Yes. And let's end with some of your biggest learnings, because I know you're, a big student of Charlie Munger, Warren Buffett kind of, philosophy. What's your biggest learning from all the years you went to Omaha? No, first thing is you have to be a good human being. That is very important. I mean, that is one quality which will take you very far. आपको कौन कहाँ मिल जाएगा कुछ मालूम नहीं पड़ेगा. You have to be good. The good people will attract good people. Bad people will attract bad people. So, so that is one thing which I learned, and I saw. And in Omaha, you go get to meet such wonderful people out there. So that is one. Second, the power of patience, because compounding requires patience. If you want to do 1,000,000 times, it requires 60 years. So 60 years keep doing the same stuff. So you have to bring passion. Because what is passion? Passion is when everybody is kind of dejected, you love to do it. Like market is down. A lot of people, they don't want to come. So when I go for a walk in the morning in Worli Sea Phase, the moment there is a little bit of crowd and bit drizzle, there's nobody. Nobody means not even a soul. We are 5 guys, we'll all be there. We'll put our jacket on, and most of the time, out of say 20 days in rainy season, hardly 1 or 2 days we get drenched. Otherwise, God is also great. So you have to follow the discipline. Following discipline and following it for long term. That is what I learned from them. Because Buffett started in 1965 or something at some $150 million. Today is $1 trillion. 20% compounding. That's about it. He didn't give dividend, which I think he should have given some. Raamdeo ji, it was really a pleasure. I've spoken to you so many times in the past, but I think this has been one of my best conversations with you. And I pray you live till 100 years. Yeah, why not? I'll live because I'm working for it.
Acha.
Yes.
Okay, thank you so much for joining us on the show. Thank you.
Thanks for coming.